Hey guys, before we move along here, I mentioned in the prior video the small caps, and I mean, look at this unusual action in the inverse leverage ETF for small caps. TNA inverse is TZA. TZA is obviously a bearish ETF, and you can see, I mean, look at it from the very beginning of October. This started to form a base and was refusing to budge as the market continued higher. The S&P, even on the day where it dipped below this, they wanted to buy the heck out of it, and that was the highest volume day since a month prior. So you have the beginning of the month here, and then you have the beginning of November. They were buying this opening low. So it's tells you a little bit something about the market here, at least from the small cap perspective, is that we're probably limited in upside in this short term here. We need some back and filling and some more positive news to get to that S&P number that I'm looking for. I still think it's intact, but this is meaningful here. It's I mean, that's a long base for a whole month, and then you have the spike here. Kind of funny because you can't get a lot of follow through from the pivot break on the highest volume that we saw. That was late September, but we're kind of grinding up in there. So small caps are saying, hey, we want to go lower, but we need a reason to. All right, I had a fellow trader looking, asking me about XBI. That's, I follow IBB more. XBI is definitely volatile because you look at the components and the higher percentage of the portfolio. It's very high beta, stocks with a lot of volatility in the biotech sector, and they're smaller in scope than the IBB. The IBB, you have Celgene, Amgen, stuff like that. Whereas in XBI, you have stuff like Analem Pharmaceuticals. I mean, this is up 250% year to date. Exact Sciences up 300%. Puma Biotech up 300%. They're all 3 and 2% of the portfolio. Seattle Genetics, these are mid and low cap, smaller cap stocks. Sarepta Therapeutics, one that I've traded in, like Clovis, Bluebird. So these are going to be extremely volatile, and you can see when we start to see some pullback, they're going to get whacked a little bit more than the IBB, in my opinion. I want to show you something interesting on this chart really quick here. Obviously, like we talk about directional changes, where they started and where they ended. Where they ended is obvious sometimes, or where they started is a little bit trickier. And I'm going to show you something how interesting this is. If you run this line right here through this candle and we take out these 2 outlier days because we close under, then we get right back over it. The reason I'm doing that is because if we continue in a downtrend, I would put my line on the lower area. We didn't continue in a downtrend. We started and made a higher high. So I'm taking these 2 lines out. I also want to catch the bottom of this one, and I need to catch these in here. So if I catch this in here and this area in here the way I want to, it gives me the top over here as well. The bottom was easier to do, obviously. And we do have a drop through there and then a retrace. So this is a little bit suspect here. I'm not sure I'd be too keen on going long XBI in this area. If anything, I'd probably be more apt to short it if it got up closer to 84, because I can pretty much tell you where my top would probably be, where I'd cover. Downside here is unknown, but the upsides to me is definitely gives some more definitive numbers. Let's look at some moving averages on XBI here as well. Real quick, you have a little bit of divergence here. Not that we did make a higher high once we broke the pivot here, but we did regain, or we retouched the channel line on the top. But no confirmation in the MACD at all. You don't have a smoothing effect in here. In fact, you have more separation. You roll back up and you don't get across. So this looks a little suspect here. We're also bumping up against that channel line here. Still in an upward trend, just like everything in the market. 83.40-ish might be a top area. No interest here long though for me. Too much volatility in those stocks. Alright guys, bear with me here. So a couple more things that I'm looking at when I come in on this. You have a nice move here on the 4.8. You have some good separation. Then you have a bounce along the 4.8. You have an attempted crossover back to the trend line, and then you have another resumption of the move upward. Here's where your cross comes in. And this is textbook. You have a 4.8 cross to the downside, and right along that line is where we failed, right at the open. Back on October 18th, and we've never made a move back up there since. So Pretty precipitous move down, probably helped by the market strength, dragged up, and we retouched that top line here. We penetrated through it on the bottom, and we do have a 4-8 cross on the negative. So this is an avoid in my opinion. So anybody looking to go long here, you're going to have to give me 3 days above this lower trend line before I'm interested in buying. And then I'm going to set my stop at around 82.70, and we're already below that right now. So definitely some work on the XBI in my opinion before I go long. In fact, I'd be more prone to short it if it can get up to an area where I think there's a 2-to-1 ratio in my favor. And really quick, AAOI. I'm not sure I want to pull the chart up here. I'm running out of time. But it kind of did what we expected it to do. We wanted it to see that 41.50, and you guys can correct me if I'm wrong. I forget what the number was. We did get a 4-8 cross to the upside. We talked about it being active and on heavy volume. And then we have a touch. Remember, this is a very volatile stock. We literally have a touch on the 4 to the penny. And then some bullish buying here. Like I said, I still think this has some work ahead of itself, and we'd need a close above the 44, 43.90 maybe to give us some confirmation. But now we have some divergence in the macro market where the market looks a little suspect. So everything's not aligning here perfectly for AAOI, other than the news and the reaction to the news. So we're still looking for 3 days above that level. Today would be day 3. Kind of above that level. We want to see the 41.50 hold, preferably the 43. A close above there 3 days would be nice, and anybody doesn't own a position. It looks a little more favorable. The stock still scares me a little bit, but I am still holding a small position in it and hoping for the best. Here's my descending top line I'm going to use on AAOI. We can draw quite a few more lines as well, but this is where I believe that this downward trend changed direction, right in here. We can also draw lines from the gap down, but I'm just going to keep this simple for now. You probably have a descending line that's somewhere in this area that crosses to that wick. The reason I'm using this is because you have 1, 2, and a close and an open above it, and you can't do the 3-day hold. In fact, you have an open here and it fails, so you only have 1, 2, and then you fail again. You just can't get 3 days over the descending line to change the direction on this thing. Just becomes suspect. Nice pivot, bounce here, but then 1, 2, and then once again you can't get that 3 days over. Then here's where it gets a little tricky. You have an open above it, then right on the line, and then 1, 2, and then it fails again. Like I said, 3 is my favorite number. It always has been. And then you have this huge drop here. So this is going to be a really crucial line down the road. I'd be happy to get there and test it, but long way away, obviously. We want to see if we can fill the gap in here and get back up to the 46, 47 area. But in between there is the Fibonacci retracement, and I try to keep it simple. I didn't want to go to the top of the wicks, and I didn't really want to go. I want to go to more common areas. So in and about the 52, which is in the gap still. So technically you wouldn't really consider that an area of resistance, but on a Fibonacci basis, a 23% retracement would put us around 52 if we can get back over the 46, 47 area. That's a long way off here, and hopefully the market will kind of behave and give AAOI a chance to get up there, but 52 would be a great target. We still have work to do on the low end here. We have 2 days in a directional change, but we're very suspect here still and very cautious.